Hi guys, I'm Mark from AUFX Pro Trading. Just a short video. I just want to demonstrate to you what I talk about as far as trading goes, and the market isn't a free walk, right? Some of you guys still believe that no one can control the market. Unfortunately, the market's controlled probably 95 to 98% of the time. So in this video, it's just an extract of one of the weekly wraps I put out. It was last year, but it's really relevant to what happens in trading and why everybody gets caught up and ends up trading the wrong way with false breakouts and whatever. So as we come through it, I've got targets marked on there. Those targets are from actual trades that I trade and teach. The 12-hour targets are from the base 12-hour chart that I use. When there's a setup on that, I come back and then look at smaller time frames, which is what we'll be looking at here. However, I want those targets still marked on my chart because they are relative, and those targets are where the liquidity providers are going to find the final resting place of these trades. That is where their logarithms push it to, backwards and forwards, week in, week out. So it highlights two things. A, as I said, how difficult it can be if you do not understand. B, it highlights they will let you win one or two and make sure you lose 3 times in a row. Also, it highlights the level of understanding I've got and where I've taken it to, and the targets that I use I can rely on. So let's just come through and have a look at that and then summarize in the end. Okay? Hi guys. Okay, so we're in the weekly wrap for the 7th of October. So firstly, I want to just recap on what's happened this week. So we get to the weekend and we see this out of the blue, this unexpected significant move straight up. Starts midnight Thursday night and goes straight up to Friday night. So what the hell's that all about? So if you remember 3 or 4 weeks ago, we were looking at long range targets. And if you remember back, I said then that these targets won't get taken out straight away. I said that they would take a while. There'd be significant retracement, and when they do get taken out, it's going to be when no one expects it. So here it is. So let's just rewind and come back and go back to where those targets were and have a look at what was going on back then, just to refresh your memory. Okay, so if we come back here and look, we had 2 very significant trades at play. First of all was the pound Swiss franc set time trade, 7-section trade. Entry level was down here. During the course of that trade, it produced 2 by 50% extensions, right, from that level to there and up to there. Now, while that was in progress, I used 12-hour charts, as you know, and on that there was an entry level thrown up here, long on a 12-hour chart. Also, that 12-hour had a 50% extension, which took that target level from up here on that particular trade and took it up to there. So we've got the first level for the 12 hours here, set time trades here. So we've got 2 significant times, basically a few points apart, which is the level there on that blue line. And then we've got the really long range one up on there. So what happens is, and this is, as you can remember, I was explaining these what was going on here. So we had a big long move down in the pound Swiss franc. Now it's turning to go up. So the trick with this is to get everybody on board and then try and stop them out and get them sucked back in the wrong way. So as you know, I explained that this was going to take probably 3-4 weeks to unfold. Such a powerful long range target like that is not going to go there directionally, and to watch what happens during the process. So, and we're in and out of a couple of trades in this here and up in here, and we had stops under here and never got past that. Then we had other smaller trades here we were playing around with where it broke through, and they come down and stopped us out, which is fine. So we moved on from there with those levels. So we watch what happens in the activity. So we've got a bullish move up here to start with, up, and it breaks through again and again, and this is where everybody now starts to climb in. Coming into the weekend here, they believe it's going to go up, and then when it breaks the top here, this is the one where everybody that's been sitting and waiting, which is like the stock market, it's always bullish right at the end, and away it goes. So at this particular point in time, they've got really an overbalance of long positions. So what they've got now is a situation that they need to control. So what they're going to do is set that up there now so they can make sure that they can take out as many of those long positions as possible, and more importantly, turn the psychology of your trading so you now become bearish and believe that that market is not going to continue up, and once everybody's been stopped out enough, then they're going to do the last ditch effort to try and drive it down to suck as many people in then short before the final move. And this is exactly what they did. Major resistance level, and this is where I have no time. As soon as I see an institution put out, oh, it bounces off this resistance level, you know they're setting you up for a failure, right? Resistance levels are talked about widely, specifically so that they can get a congregation of stops just nicely underneath that. It makes an easy target for the liquidity providers. That's what using resistance levels does. Also Fibonacci, it's a great place for stop hunting. There's no other way to look at it. It's not a trading tool, it's a tool for the liquidity providers. It's not for you, it's for them, to suck you in and make you believe everything that you're told about custom indicators. So here's our first resistance point. We come back and mark them on there, and we'll come down here. They even got right down to here. Well, there's, it shouldn't really get that far back down. That's under there sort of thing. We're playing the game here. We know what we're doing. We're brilliant traders. Anyway, so we start off. Oh, we get the perfect double top. Yes, we all know that double tops work. Well, they work one time in three. Down it comes, breaks under, doodles around, and then it breaks again. So anyone that was still holding on here, they would have moved their stop up to here. Here's the next fallacy, trailing stops. What does everybody do? They go back to the last jerk back, pull back, and they move their stop up to there. That's why they love talking about trailing stops. Once again, it's an easy position for them to run stops, because they know all the people who've got no idea in trading are going to move their stop up to that level. Surprise, surprise. What does it do? Straight down through. Oh, and we thought we were just unlucky. No, it was all calculated. So then some of you guys will be watching, you'll move it down to here and you'll cave under there. So you'll put it just a little bit further under there to make sure, no, I'll be safe if I go under there. And it bounces around here and you're hanging on for dear life and hanging on. Oh, it starts to go up, you breathe a sigh, then all of a sudden, in one straight bar, there it is. They've got you. So now the guys that have had maybe already 2 or 3 guys that goes at going long are starting to think, well, maybe this market's going to go short. So what the liquidity providers are looking for now is, as soon as they get a massive imbalance short compared to long, when they get that, they're ready to do their final move to these long range targets. We come down and it breaks through again, even more convincingly. So at this point in time, there's probably still traders in from back here. There's guys that do really super long-term trades, or people look at these levels from across here and project them across for stops. So what they want to do now is create massive confusion. The best way to create massive confusion in a market is with a widening spread. Okay, this is a tactic they must absolutely love. So it comes down there, all the stops are here of course. On one bar it goes up through, then it makes this beautiful double top, so everyone piles in short. We're right now, and comes down underneath there. Once it breaks under there, there's going to be so many people start to go short again, and they'll put their stops up above here, and of course the sweep gets wider, so it's taken any stops out that would have been here for these long trades, right, up here to taking the stops out above there, and now it starts its progress down again, down, 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 down. Once it breaks through under here, everybody, there's basically maybe 5 or 8% of traders that are watching this looking for a long position. They're the ones that make money in the market. They understand what I'm telling you here. They're waiting for this long inversion to come. So once it breaks under here, all the massive shorts start accumulating. Once there's enough shorts there, once that triggers the algorithm, oversupply of shorts need to go long, the computer rectifies the positions and starts a massive buying spree. Simple as that. And of course the first objective is, in that first main move, before anybody thinks about it, is there will be a lot of people that will have stops here. Because you know, you read some of these blokes that trade, oh, we use a 4-to-1 risk reward, our stops 4 times our trade, we never get stopped out. Okay guys, well, there's a 250 point stop. I wish you well on that, because most of those trades you're doing, you're looking for a 20-point profit target. So, you know, people will have a fail-safe stop there, but they'll be monitoring levels here, sort of thing. All of a sudden you've gone out late night shopping, come back 3 hours later, and there's 250 points down the drain immediately. There's the start of the move in one hit, and then of course to close the week out, up we go there. So they've spent 1, 2, 3 weeks, almost 4 weeks, conning people into getting out of positions, setting people up to go short, and doing the sweep here to really confuse the issue, and then it breaks out of that sweep short, which means that's perfect. Everyone should be going short now. Now they've got that into your head, there's what happens. So that's that week. And what happens next week? What does it do? Up to the final resting place, and there it is. And have a look how long it takes to get past that level. Right, there's the level of that target. So these targets and trades are what I do in the course. They are what I trade by. They are exactly what I teach. That's what you learn with me. Calculating those targets. That's the power of those targets. If you can't do that in your trading, you have got no hope whatsoever of ever getting up into that 8 or 10%. If you're someone that's in there taking 10 or 15 points, 20 points out of a trade, I wish you well. That's all I can say. So let's finish on a positive note. Take care, safe trading. If I can help you anyway, find my details on the website. Bye guys.